Now, the biggest question is, should I still buy Facebook? So given the recent flash crash, Facebook actually suffered a $230 billion wipeout in a single day, where it fell more than 26% in a day. That's roughly how much Alibaba lost in a period of 12 months, give or take. On its technicals though, I think no one will deny that Facebook is essentially oversold. So will it be poised for a sound rebound soon? Probably, but I'm more interested in whether the challenges that are mounting onto this business currently is structural or just transitory. So I wouldn't be spending too much time on their recent earnings call because I believe that actually many YouTube content creators have already done an extremely thorough job in reviewing them. So I will just be synthesizing some of the bull and bear concerns on both sides of the aisle, and of course add in my own perspective on them respectively. So in the name of transparency, I currently don't own any stock in this current business. But I was just doing my own due diligence because it seems like more and more people are getting extremely interested and are jumping onto this bandwagon, essentially shouting out that, hey, Facebook is of deep value, and you will know my conclusion at the end of this video. You know what else is of deep value? The like button, of course, just because it's absolutely free and the ROI of smashing it is making me infinitely happy. So what are you waiting for? Help me turn the like button blue. So just to qualify, just because a company is traded down 40% from its all-time high, don't mean that the company is currently 40% undervalued. 40% cheaper from its all-time high? Yes, but investors will need to make their own judgment into the prospects and the future of this said company. So just a very quick summary of Facebook on its most recent earnings quarter. The few positive things were that advertising revenue in the full year of 2021 grew by more than 35% compared to 2020. If you were to compare the Q4 of 21 to Q4 of 20, it was a 20% year-on-year increment. And that is probably respectable, but for a FANG status, it is the minimum expectations. Now, they also generated 40 billion in free cash flow in 2021, which shows that Facebook remains a cash-generating machine. So everything else from here is kind of on a downhill. The net income decreased, annual capex increased by 22%, margins shrunk from 46 to 37%, and the user base growth essentially slowed down, and their daily active users actually declined on a quarter-to-quarter basis for the first time. So the negating factor for this slowing in growth was the increase in ARPU, which is average revenue per person for short, which propped up the earnings for Facebook. But there are trade-offs from this increase in ARPU, which will be discussed later on. Lastly, they are also getting extremely serious with this metaverse push, where they had a 10 billion in operating loss just to generate a $2.2 billion in revenue under their Reality Labs segment. Personally, I think the nail to the coffin was the outlook provided by Facebook's or Meta's CFO. So he essentially guided a 3 to 11% year-on-year growth of Q1 of 2022 and cited growing competition in engagement towards Reels, i.e. TikTok-style content, which monetize at a much lower rate. Furthermore, Apple's iOS changes seem to be damaging Facebook's top-line revenue growth as well. Now, rather than disqualifying everything as FUD, fear, uncertainty, and doubt, and all these being short-term challenges, I think we should dissect all the different bear theses and try to be objective about it. But before that, I will try to summarize what are some of the extremely huge bull arguments that are surrounding the entire narrative of the stock today. So the most obvious bull argument would be that Meta's current valuation is a joke, especially with its current FANG status, and it is obviously oversold. So I think we have to tread extremely carefully, especially with this concept of a FANG premium. So all these different FANG companies had their FANG status because their inherent business model allowed for them to blow competitions out of the water, and there was no competition to begin with. And by default, most of these companies are monopolistic in nature. So is the sell down really unwarranted when the underlying business model starts to show cracks and weaknesses? I'm not too sure about it. We'll explore a little bit further later. So although I believe that markets can be and will be irrational at times, let's not really assume that Mr. Market here is really all that dumb. The markets by aggregate are probably a lot smarter than what we think. So the flash crash probably reflected the slight loss in confidence on Meta's ability to remain a strong player in the entire advertising industry. So is it dirt cheap yet or not? Nobody knows yet. So on the second point, we cannot deny that Facebook is still deeply integrated to so many people's life one way or another. So you might not be using the Facebook platform, but you probably have WhatsApp and Instagram downloaded in your mobile phones. So their network is still held deeply together. The problem now is, will it be eroded away over time? And is this the start of the erosion? Facebook also seems to have a superior ability to monetize their user base, which was very beneficial to their clients on the value proposition front for advertisers with their targeted advertising offering. So Facebook also has a track record of taking on fierce competitors, either by the way of acquisition, like Instagram and WhatsApp, where they just buy their way up, or just the plain out imitating Snap Stories and TikTok Reels. Lastly, if you were to give their CFO the benefit of the doubt, short-term pressures on supply chain might ease over time and will probably ease over time. And advertising dollars and demand will flow back to these companies because they will require Facebook services. Now, let's explore what the bears are currently talking about. So the first and most obvious point is the competitive landscape. I actually respect the candidness of the management to be open with talking about their competition, where Mark Zuckerberg essentially acknowledged that TikTok is so big as a competitor already, and they managed to continue to grow at quite a fast rate of an extremely huge user base. So let's be clear on one thing. The commodity that all these companies are currently vying and competing for is ultimately our attention. So the longer you stay on their platform, the more they can monetize the heck out of you. However, there are major differences amongst many of these attention-grabbing platforms. So the first distinction is between curated, industrially produced content versus user-generated content. So companies like Disney, Netflix, HBO belong in the first category, while companies like Facebook, Twitter, Snapchat, TikTok belongs in the second. So fundamentally though, I believe they all serve different purpose and different function, and the pie is big enough to go around. So if we were to look at it on a horizontal spectrum, where we focus on companies that has user-generated content, because the first group don't really care about whether you stay on their platform or not. They just want to hook you up into their entire ecosystem or onto their entire platform, enough to keep you paying for their monthly subscriptions. So now, only Facebook, including Instagram and Snapchat, seems to have this social element to its media business, hence the name social media. TikTok and Twitter are really more for entertainment purposes, especially so for people that wish to receive enlightenment from dance moves specifically. So in my humble opinion though, this social element will remain as Facebook's quote-unquote competitive advantage, because it retains a baseline number of users and a baseline number of attention on their platform. So the problem now is attention span is probably shrinking rapidly, which directly affects monetization. So the addiction and flywheel at TikTok also don't seem to be slowing down of any sort. So the question now comes to whether you believe that Facebook can come out stronger from this competition against TikTok with Instagram Reels. Oh, and in case you guys have forgotten, TikTok is a Chinese ad, by the way. Take this information for what it's worth. So one thing for sure, out of all the FANGs, it definitely looks like Facebook is the least monopolistic, and it is both a good and a bad thing. Next, on the second war between Facebook and Apple, for what it's worth, the clear conclusion is that Facebook seems to be rather reliant on Apple for quite some time now. And this development will definitely wake Facebook's management up, especially when their direct competitor, Snapchat, probably did a better job from bouncing back from this iOS change. On product offering, this is extremely subjective, but being a user of most of such platforms, Facebook seems to be lacking behind the alternatives. And I personally, please don't cancel me, this is just my personal preference. I personally prefer Telegram over WhatsApp and TikTok over Insta Reels. Of course, this is not set in stone, but just my own experience. Next, the most interesting argument. Facebook is a boomer app. This essentially translates to Facebook's platform losing both relevance and ultimately longevity. So funny enough, it's precisely these boomers that are worth a whole lot more compared to the 12 or 13-year-olds dancing to TikTok trends. So advertisers want people with purchasing power anyway. That said, if the platform is unable to funnel, attract, and retain new users, when these 12 and 13-year-olds grow up and become young and high-achieving adults, Facebook's monetization capabilities will be called into question again. So I have no doubt that Facebook has a team of highly skilled engineers to try to keep their platform relevant. But the keyword here is try. That said, they have been experts in trying to hack the human brain and cultivating essentially generations and generations of addicts, so the execution risk might be on the lower end of the spectrum on this problem. Side note, I do use Facebook to keep up to local and international news from time to time. Not sure if you'll consider me as a boomer. Anyway, coming to the last part, which is probably the most worrisome part. I think we can argue for both cases of whether Meta platform is a maturing company or a matured company. Initially, the recent name change was speculated to divert attention away from regulators due to the negative connotation attached to the name Facebook itself. So just a few months down the road, the narrative seems to change to Facebook's desperate attempt to stay relevant by uncovering a new curve. And this new curve, it's called the metaverse. So look at how quick stories change. At one point, everyone was jumping onto the metaverse bandwagon, even introducing things like the metaverse ETF. Now, everything seems so uncertain and vague, and this capex Meta is willing to spend in the coming 3 to 5 years are frowned upon by many investors. So on the plus side, this rebranding actually solidifies the company's commitment for this push towards the metaverse. And it definitely aids in attracting relevant talents from all its different competitors, including Microsoft and Alphabet. On the negative, it just introduces more uncertainty for investors who are interested only in the advertising platform. So Meta's current business model is very similar to C Limited. For C, Garena is printing the money while Shopee is burning for it. So for Meta, family of apps will be printing the money while Reality Labs will be trying to push the innovation frontier. However, e-commerce kind of have a proven track record, while Metaverse still remains as a vision. But hey, every great invention starts from an idea and an extremely courageous heart, right? So after speaking for so long, the important question is, should we buy Meta today? I can't tell you what to do, but I'll tell you how I see it. Everyone is probably trying to put a price tag to the uncertainty of the business, which usually comes out overestimated, but I'd rather be a lot more conservative than be proven wrong about my optimistic projections underlying my assumptions, right? So, I will just provide you with a quick screenshot of my current valuation for Facebook. I know, for all you bulls out there, you guys are probably going to cancel me. My projections are honestly on the pessimistic spectrum. I took a haircut for the top line cash from operations and scaled up capex. And yes, I pulled most of these numbers out of my ass. That said, not all assets are equal and some are better than others. So you should minimally come out with a price that you are comfortable buying this company and to own Facebook essentially. Therefore, I think that Meta is kind of fairly valued now, and to me, it doesn't really scream deep value. And of course, I'm not saying that it's a value trap either way. So I know I will be wrong, and if Facebook moons from here, then so be it. That said, given the current market's volatility and how many things are uncertain, I would start getting more and more interested if the company trades sub 200. And this is my own view, and I clearly don't know what I'm talking about. So please do your own due diligence, and I look forward to all the comments regarding this company. So to simply sum up this discussion, bulls will feel like it's damn good value because it's a FANG stock, trading at such a steep discount relative to all its peers. And if you were to just use any of the historical averages, unlike me, where in my own DCF I use extremely pessimistic numbers, you probably get a promising return. While the bears on the other hand, you will probably only have 2 comments. Number 1, TikTok is destroying Facebook, and number 2, Facebook is for boomers and the cash burn for the next frontier is just going to be a black hole. So I'm somewhere in between, and through this investment, your conviction in Mark Zuckerberg will also be tested, and this quote-unquote trust cannot be quantified in a DCF model. So I'll see you in the next video, but more importantly, I'll see you on the moon. Goodbye!